In August 2025, the High Court in Kenya determined that the tax point for capital gains tax is the date that the shares are legally and economically transferred through sale and payment. This is very important because many taxpayers have suffered. For whatever reason or reasons, the law has not been clear about the tax point when we are talking about capital gains tax. And what is a tax point? A tax point is the moment or the time when the tax is due and payable. So what the High Court needed to determine was the point at which the capital gains tax was payable. And once they determined that, the second question that they needed to determine was what was the applicable tax rate on that day, that is, at the tax point. And the third question that they needed to determine was, did the taxpayer pay capital gains tax at the tax point or not? Those three questions were determined by the High Court in August 2025. And this is very important for every single person who in the past has transacted in assets that attract capital gains tax and the transactions are not complete. This determination is also important for those taxpayers who are currently transacting in assets or properties that attract capital gains tax. The determination is also important for any person who is going to transact in assets or properties that are subject to capital gains tax. Because as long as you will transact in any asset or property that attracts capital gains tax, this tax point that has been determined by the High Court is very important, unless the tax commissioner will go to the Court of Appeal. And if the tax commissioner decides to go to the Court of Appeal, two things can happen. The Court of Appeal can reverse that ruling or it can uphold that ruling. But when you look at all the facts, the taxpayer paid the correct amount of capital gains tax. But what are we talking about? We are talking about the ruling by the High Court on a case where the taxpayer was being asked to pay capital gains tax at 15% instead of 5%. But where did all this start? Stay tuned. On December 31st, 2022, something happened at midnight. And this is very important because it affects basically almost all taxpayers. What happened? It was a capital gains tax issue, that is the CGT. Before midnight, December 31st, 2022, capital gains tax was at 5%. But 1 minute later, on 1st of January 2023, the capital gains tax increased from 5% to 15%. 1 minute made a big difference. Remember, the capital gains tax is administered by Kenya Revenue Authority and it falls under the National Treasury. That is very important to note. Now, this August, a case has been determined by the High Court, and this is a very important determination because it is affecting very many people. When I was looking at the newspapers, they are talking about certain individuals, high net worth individuals. But these are not the only people who pay capital gains tax. Capital gains tax is paid by basically anyone who is transacting in any transaction or item that falls under capital gains tax. Now, what happened? This taxpayer, Mr. Al-H, let's just call him Al-H. What Mr. Al-H did is that he sold shares in his company to a foreign company, and that sale attracted capital gains tax. what did he do? He paid capital gains tax on December 30th, 2022. The capital gains tax rate was at 5%. He paid the money. It was a lot of money, 260.2 million. As far as he was concerned, he had paid the capital gains tax, case closed. He is an individual taxpayer, and an individual taxpayer's year is from January to December 31st. It is expected that Mr. RH reported that sale even though he had paid capital gains tax. Those details would still be put in his tax returns for the year 2022. Now, after he paid the tax, there was need to transfer the shares. Where do you transfer the shares? You need to go to the Ministry of Lands and pay the stamp duty. Remember, CGT payment has nothing to do with the Ministry of Lands. In the Ministry of Lands, what you do is you pay the stamp duty plus any other money that may be required. But when you are talking about capital gains tax, that is a KRI issue, and that falls under the Treasury. So here we are talking about two government ministries, the Treasury and the Ministry of Lands. When we are talking about capital gains tax, we are not talking about the Ministry of Lands. Ministry of Lands, you talk about the stamp duty. When you're talking about CGT, you are talking about the Treasury. So after Mr. RH paid the capital gains tax, we understand that the transfer was registered on January 4, 2023. Remember, on January 1st, the capital gains tax rate increased from 5% to 15%. And I would imagine the people at the Lands Registry must have asked, have you paid the capital gains tax? Sometimes they ask, other times they do not ask, because it's basically none of their business. He had already paid the tax. Here comes KRA, and they decide that he should have paid capital gains tax at 15%. We understand why. 5% and 15% are different. 15% is 3 times 5%. And of course, KRA has to collect tax. The question that needed to be asked and needed to be answered, at what point should have Mr. RH paid capital gains tax? And did he pay or not? Forget about the rates. You cannot talk about the rates without addressing the issue. At what point should he have paid the capital gains tax? And this is what the High Court judge addressed. And this is what he said, and I quote, "For shares transfer, the tax point is the date the shares are legally and economically transferred through a sale and a payment is made by the buyer to the seller." This whole issue was about a sale. At what point does the sale take place? Now, if I was handling this case, there are some 3 things I would have pointed out. Number 1, I would refer to the VAT, because sometimes the Income Tax Act is silent on certain issues. But when you look at the VAT Act, which is still a tax administered by KRA, according to VAT, a tax point is when either of the following takes place. Number 1, when an invoice is issued. Number 2, when a payment is made. That is when a deposit or full amount is paid, whichever happens first. Number 3 is when a delivery is made. And number 4 is when a certificate is issued. Now, sale of shares. Is it subject to VAT or not? We can say it is a transaction, but a transaction that is exempted from VAT. So, effectively, it's still under VAT, because before you decide whether it falls under VAT or not, you must consult the VAT Act. So, indirectly, it falls under VAT, but it is exempted. So, can we apply the rules and the regulations and the VAT law for this transaction? By extension, we can. Because if the Income Tax Act is silent on when a sale takes place, then you'll have to go through all the other tax statutes and find out which among them talks about the tax point. That would be one of my arguments. The other thing that I would have brought on the table is the issue of income tax. And like I have said, Mr. R.H. is an individual taxpayer. When does the year of income of an individual taxpayer land? It is from January to December. So, in this particular case, because he must have received the money, when was he supposed to report that sale of his assets, that is the shares? He was expected to report in the year 2022, anywhere between January and December. That is what the tax law expected him to do. So then you cannot drag a transaction for this individual taxpayer that took place in 2022 to 2023. Income tax is on a year-to-year basis. The question is, capital gains tax, is it about income tax? Yes, it is about income, and capital gains tax is under the Income Tax Act. Number 3, who is in charge of capital gains tax? Which ministry? Is it the National Treasury, or is it the Ministry of Rats? When we are talking about capital gains tax, we are talking about issues that fall directly under the National Treasury. Mr. R.H., did he fulfill his obligations under the National Treasury? Yes, he did. He made the payments for CGT. Whatever else happened outside the National Treasury had nothing to do with CGT. He had fulfilled his obligation under the National Treasury before January 2023. Whatever else was happening in another ministry. As far as he was concerned, the case was closed before January 2023. But now we have KRA dragging issues that fall under another ministry into Mr. R.H.'s affairs. And this is what we keep on talking about, that sometimes some people are very unfair. It's either they do not understand or they have a totally different motive. And the motive may not be an official motive. But the good High Court judge has cleared this issue. This issue was a straightforward case. It did not even need to get to this point. This was a case that could have been sorted out in KRA. But anyhow, every coin has two sides. Now everybody knows what should happen. There are very many people who have been affected by that change from 5% in 2022 to the 15% in 2023. Many have not completed their transactions. It is my hope that with this ruling, many of those cases are going to be terminated and people will continue with their lives. The case has been determined, and let us hope that the taxpayer got the ruling that they expected. Now, in case this particular taxpayer had paid any of the money that the tax commissioner was demanding, what happens? And this is important for every taxpayer who ends up with a case in the High Court or any other court. It is important for you as a taxpayer, when you get a ruling, in case you had paid any money to the tax commissioner, get a specific ruling that ABCD is the ruling, and whatever money that you had paid and you shouldn't have paid, you should be refunded. Let me repeat that again. You will get your ruling, yes, on the matter. In case there is any money that you had paid and you shouldn't have paid according to the ruling, in some cases, you may find yourself going back to court to get another order. And that is going to delay in the refund of your money from the tax commissioner. Remember, the tax commissioner is like a lion. When you give meat to a lion, it's very difficult to get it back. It is the same thing. When you give money to the tax commissioner, for whatever reason, it is very difficult to get back that money. So please make sure that you get a specific ruling as far as the money that you had paid is concerned. This ruling has been made. What happens? It is important to get a copy of this ruling and keep it safely, because I know sometime in the future you will rely on this ruling. This is what happens. Rulings are made, but people, for whatever reason or reasons, they forget about those specific rulings. The High Court judge has determined the tax point as far as CGT is concerned. This is a ruling that is binding on everyone, unless the tax commissioner will go to the Court of Appeal. And if the tax commissioner decides to do that, the Court of Appeal can either uphold the ruling by the High Court or put it aside and go with the ruling of the Tax Appeals Tribunal. And until any other court has said or decided that the High Court was not correct, this ruling is binding. Where I sit, the High Court is correct in its ruling. The determination of this case is one of the best things that has happened for taxpayers in 2025. We have been discussing about the determination of the case of Mr. R.H., where the taxpayer paid capital gains tax based on 5% tax rate that was before the change to 15%. The tax commissioner went after the taxpayer and they were demanding the extra 10%. But the High Court has ruled that the person should have paid tax at 5%, which he had already paid. Now, in case you have an issue with capital gains tax, you can always get in touch with us and we can explain to you, or whatever other service you may require as far as capital gains tax is concerned. We are available. The link is in the description of this video. We also have other links to many other resources that can help you as a taxpayer and also help your business. Till next time, this is Dr. Wakaguyu. Stay well.